Welcome to Greenshoe Radio, brought to you by Greenshoe Media Group. I'm your host, Mark Bunting. Our guest today is Aurora Davidson, CEO of Amerigo Resources, which trades under the ticker symbol ARG on the TSX and under the symbol ARREF over the counter in the US. Aurora, great to see you again.
Thanks for having us back, Mark.
Now, we've talked before about this, but I think it's always worth reminding listeners, in case they're not familiar with the company's story, of Amerigo Resources' unique business model and its relationship with the Codelco, the largest copper miner in the world. So could you give us a brief refresher on the company?
Sure, that's a great place to start at, Mark. Amerigo is different because it produces copper without being a copper mine. So I always like to use the analogy of a copper factory. Instead of having an ore body from which we produce copper concentrates, what we have is a long-term contract with Chile's Codelco. And I will come back to who Codelco is in a moment. What our contract gives us is the right to tap into the tailings of Codelco's most significant copper mine, which is called El Teniente. And it's actually one of the most important copper mines of the world. And we extract further copper from these tailings. So I'm taking two steps back. Codelco is the world's largest copper producer, as you mentioned. It has 8% of copper production worldwide. It is owned by the country of Chile for the benefit of Chileans, so that's also a significant part of the story. And tailings, which I mentioned before, is where we get our copper from, are the end product of mines, the waste product of mines, but they typically still contain metals, in our case copper, although at low grades. So what we have at Amerigo through this contract are the rights to the current tailings produced by Codelco's El Teniente mine, and also to historical or old tailings, if you want to see them that way, which were deposited in the past century by El Teniente. So we do not have an ore body, we do not have exploration and development prior to production, as all mining companies do, and we do not have either the responsibility for the long-term handling of the tailings, as all mining companies do. So we have access to the tailings, we produce copper out of these tailings, and then we return the tailings to Codelco. In return, what we do is we pay a royalty to Codelco based on our production and based on the market copper price. So it's a win-win formula for Amerigo, for Codelco, and for all stakeholders.
Now, Aurora, Amerigo released Q1 earnings results in early May, which you described as robust. Revenue, net income, and EBITDA were up right across the board from last year. The company also met its production and cash cost targets. Can you run us through some of the highlights from the quarter?
Sure. We had a strong start of the year. We reached our copper production and our cash cost targets, which is quite important. And we also had the benefit of having a strong quarterly copper price, which in Q1 increased to $4.64 per pound. All the numbers that I referred to, Mark, are US dollars. The effect of these strong copper prices, in our case, is magnified because we have stable operations, we have control costs and execution risk, and Amerigo has no substantial CapEx requirements. So in terms of the figures, our financial results in Q1 included revenue of $53.8 million. We had net income of $15.5 million. Our earnings per share were 9 cents US or 11 cents Canadian. We had EBITDA of $26.4 million, and we had free cash flow to equity of $17.9 million. At quarter end, Amerigo's cash position was $71.1 million, and our borrowings were $30.8 million, which essentially gave us a net cash position of $40.3 million. I'm very proud of the execution of our team in Chile under key areas of responsibility, which are production, operational continuity, and cost control, because these are all showing up in our consistently good quarterly financial results, Mark.
Now, I saw that production in the quarter was up 6% compared to last year. And you discussed just a little while ago the differences between fresh tailings and historical tailings. Remind us how much more contribution you'd like to see on the fresh tailing side in terms of your percentage.
Yeah. Well, as I mentioned earlier, Amerigo has two sources of material from which we produce copper. We have the fresh tailings and we have the historical tailings. What I wanted to do, and we started working on this last year, was to see how we could maximize production from the fresh tailings for three reasons, Mark. First of all, it is a non-depletable feed that comes to our plant at no cost from the daily production that El Teniente has. So for me, it made a lot of sense to tap into this flow of tailings first and get the most out of them rather than to accelerate the depletion of the limited resource that we have on the historical tailings deposits. A second reason was that we use significantly less water to produce copper from fresh tailings than from the historical tailings. And as some of the people that have been following us know, water is critical in Chile, which has been facing long-term drought conditions. And then the other aspect was that it costs less to produce copper from fresh tailings than from historical tailings. So what we did is we went back to the basic data analysis and to lab work, which we conducted with our technical consultants, with our staff in Chile, and we realized that we could achieve this objective of producing more from the fresh tailings without losing recoveries if we made a series of changes to our plant configuration, including allocating more grinding power to the fresh tailings than to the historical tailings. So we have essentially reached an ideal scenario, which can be shown in the numbers, in how the production composition has changed. Fresh tailings production was 45% of our production in the past, including our Q1 2021 comparative. And in the last quarter, we increased that to 58% of production coming from fresh tailings. And because of these changes, we can maintain maximum production levels while using less water and delaying the depletion of historical tailings. So we essentially have reached that sweet spot mark where we wanted to be, and we got there through the space of the last year. And now these changes are important because they give us a very solid foundation to continue deploying our return of capital strategy.
That's really interesting, and it makes a lot of sense. Now, another unique aspect of Amerigo is the dividend and the share buybacks that you do. So in the quarter, the company returned $7.6 million to shareholders. You also talked on the conference call, Aurora, about the possibility of a top-up dividend, as you call it, which you like because of the flexibility of it. So can you explain how that would work?
Sure. I like that question. We have been working hard at Amerigo with our board of directors to essentially deploy a payout strategy that provides us with flexibility, because this is a business that moves with the ebbs and flows of the copper market. But at the same time, we wanted to have that strategy to allow us to maximize shareholder capital returns and also protect our share price during periods of market weakness. So in order to respond to this desires that we had, we came up with three pillars of Amerigo's capital return strategy. And two of them are already in place since the fourth quarter of 2021. The first one, of course, is a sustainable quarterly dividend, and that's the basic of the whole strategy. We're currently paying 3 cents per share Canadian on this dividend, and what I want people to understand is that we see this as a consistent dividend, because no company ever wants to cut its regular dividend, and our board, of course, is no different. So Amerigo shareholders should count on this quarterly dividend in their portfolios. The other pillar, the second pillar, is the share repurchase program. Currently, we have a normal course issuer bid, and we've been actively purchasing shares for cancellation under that bid. We have 10.75 million shares that can be repurchased. We've done 4.4 million shares so far, so we have another 6.4 million shares to retire under the normal course issuer bid. And these retirements are done at market prices. And then, as you were asking me, and this seems like a long segue, but I thought it was important to give the whole background. The third pillar is the top-up dividend. And you mentioned that what I like about that is its flexibility. So let me give you a little bit more color as to why I say that. What we intend to do with the top-up dividend is to essentially have a balance of having the safe quarterly dividends without leaving more cash than we need to have on the balance sheet. So the top-up dividend can be seen as a performance dividend, can be seen as a market performance dividend. The higher the copper price, the higher that top-up dividend will be in its transfer to the shareholders. So top-up dividends can be paid at any amount, at any time, and as frequently as the board considers it appropriate. There may be top-up dividends multiple times during a year, or they may be temporarily delayed if the market is facing a slightly weaker condition. So that's why we see it as a very flexible tool in our toolbox. We have not yet paid a top-up dividend, and in my opinion, once we do, and the market recognizes the potential size of this type of dividend in a high copper price environment, this will create a very supportive floor under Amerigo's share price. Our view is that as the market becomes more comfortable with Amerigo, our share price can re-rate to adjust for yield normalization, and that re-rating could be significant.
And just a quick follow-up there on the top-up dividend and the possibility of it, Aurora. I believe I remember reading that I think you said if copper averaged 450 for a time, the top-up dividend may equal as much as 27 cents a share. Do I have those numbers right?
That is correct. That is correct. We basically did and it's on our website. We have a slide because we thought it was appropriate to educate the market as to what that potential dividend can be this year. Remember, we're bringing forward a significant amount of cash at our start of the year. We are generating substantial cash as well. So what we did is, look, let's take an average price, $4.50, and see what the dividend could look like. And you've got the number right. It's 27 cents Canadian per share on the top-up dividend, which could be paid this year under those conditions. Okay,
let's continue with the price of copper. You've said Amerigo is very sensitive to that. For example, you've mentioned any 10% move in the price of copper, either up or down, equals about $7.6 million in revenue. Now, copper, as you know, has been more volatile than usual lately, hit nearly $5 a pound in early March. And as we speak, I just checked a little while ago, trading at $4.16 a pound. So what are your thoughts on the recent price movements on copper lately, and why it's been moving around as it has?
Yep. Well, I think that in general terms, news are just not taken lightly by the market anymore. There is a faster and deeper response to either good news or bad news. We are what could have been an overreaction in the past is now the normal reaction. So in this context, the negative news from China in the last weeks around their zero COVID policy have for sure impacted the price of copper, given there's an obvious connection regarding a temporary suppression of industrial activities and lower demand of metals in general, including copper. But if you add to that basket concerns regarding inflation, the Ukraine crisis, monetary tightening, you can see that there are several macro themes that are putting a dampening effect on the price of base metals. And you could say that copper in this way is being seen as a proxy for the market's current expectation regarding global growth. You may recall the old tagline of Dr. Copper as being an indicator of the state of economic affairs worldwide. But that's the macro view. And I do think that this macro view is currently overshadowing some of the micro aspects of the copper market that also have a significant influence on prices. For example, supply challenges. What may happen if Russian copper is suddenly sanctioned, which is currently not the case? And also, I think it's important not to lose perspective. Yesterday's closing price was $4.20 per pound, which was not a low copper price. As a benchmark, the average annual copper price in 2021 was $4.22 per pound, and 2021 was a great year to be a copper producer, as evidenced by Amerigo's strong financial performance. So there is volatility. Prices are not topping $5 per pound, but we're still in very robust territory as we speak. And I think that these dips are only temporary ones.
Now, continuing on this, the macro theme here, looking further out, you said some interesting things on the conference call recently where you said the technical, political, and environmental pressures will keep the copper market tight over the next coming years, and that about $100 billion needs to be spent by 2030 to close an estimated annual supply deficit of about 4.7 million tons. So what's your perspective on the macro picture for copper the next several years and how that will impact Amerigo?
Sure. Look, the major copper producers in the world are finding it very hard to maintain, let alone grow their production levels. If you do a quick online search of recent news regarding copper producers, you can quickly find out that in the last quarter, the quarter ended March 31st, the production results of all of these big copper producers fell below expectations as their operations continue to go into lower grade areas. In addition to this challenge, which is it's very real, copper producers are also faced with resource nationalism. Just take a look at Peru, more stringent environmental requirements, take a look at Chile, and social scrutiny that's affecting current and future projects. And basically, this is happening worldwide. But the important point to realize is that the world needs increased copper production, not just the current levels of production, in order to satisfy future demand. And this demand is coming essentially from the decarbonization path that we need to follow in order to essentially maintain ecological balance in this world of ours. So it's not a trivial pursuit, right? So one interesting study that I was reading and that I mentioned in the earnings call is from CRU, one of the leading experts in the copper industry. And what they were indicating was that they're estimating that we will be having, as the state of affairs is, an annual supply deficit of copper of 4.7 million tons by 2030. And this may not sound like a very relevant number, so I wanted to put some context around it. Because 4.7 million tons on an annual basis is 22% of current global production. And that is equivalent in our world of essentially 3 times Codelco's annual copper production. So it's huge. It's huge. When you look at those numbers, it is a very, very challenging gap that needs to be filled. And that's why we're bullish in copper prices. And in the context of a bull market for copper, Codelco and Amerigo are very well positioned as they are essentially shielded from the risks that most of these mines are facing. I mentioned resource nationalism. Well, Codelco is a nationalized copper company, et cetera, right? So I think that we're in a very sweet spot in what will be, without any question in my mind, a very bullish market for copper in the next years.
That's some great context. Now, lastly, Aurora, the stock of Amerigo holding up very nicely. Would you say that more and more investors are starting to hear about the story and to understand the Amerigo story?
Sure. Look, as I was getting some numbers ready yesterday for this interview, I checked out our share price performance on a year-to-date basis, and it's essentially been, as of yesterday, our stock appreciated 19%, which is not the case with the stock of other mid-tier copper producers. So this is not just a sector-wide appreciation we're seeing. Some of the comparable companies have seen all declines in their share price, some of them as of up to 33%. So even if we're a smaller operation than any of these companies, what I see as being the single driver that is protecting our share price is our payout policy, which none of the other companies have. So I'm a bit of a data nerd, and I do believe that our efforts in showing why Amerigo is a different type of copper producer and how this is allowing us to be a yield play are starting to gain traction. So yes, people are starting to understand Amerigo better, Mark.
Absolutely. And just to reiterate, Aurora, it is a unique story. I have a former colleague who emailed me and once he heard I was doing these interviews with you and said, I own that stock. It's the only one I like in the sector, precisely because of what you're talking about, the payout policy and the other advantages to the model. So great to talk to you, Aurora. We hope to do it again soon, and good luck with everything.
Absolutely. Pleasure to have these conversations with you on a regular basis, Mark.
Thank you, Aurora. You've been listening to Greenshoe Radio, brought to you by Greenshoe Media Group. Our guest was Aurora Davidson, CEO of Amerigo Resources, which trades under the ticker symbol ARG on the TSX and also trades over the counter in the United States under the symbol ARREF. That is it for the show. Thanks a lot for listening, and we'll talk to you next time. Take care.